What is up, everyone, and welcome to a new series that I would like to call Stocks to Buy. So, we're going to be doing this monthly. Every month, take a look at some of the stocks that I believe are good deals that are worth taking a look at. Again, this is just personal opinion, so obviously you need to do your own research as well. These are just a couple ideas that I see available. There's not going to be a set number of stocks that I choose. It could be any amount, just depending on the month and what I find that might be a decent idea to look at. Some of these will be stocks I already own, some won't. I may or may not disclose that, not entirely sure when I plan on disclosing any portfolio information, but we will entirely see when I do that. I got a couple more videos planned in the future. We'll see if potentially that I reveal some of that information then, whether it be slowly or not, we'll see. So I'd like to get started right here with a big company, start it big, with Facebook. So Facebook, obviously, it's a company everyone knows. It's one of those companies where it's really easy to invest in a company that you do know, but you may not know specifically about that company, what kind of metrics they have, what kind of business they're actually running underneath what you know of as the Facebook platform. So it's not only the Facebook platform, and I've talked about this previously, but I'm so high on Facebook just because I believe there's so much room to move forward from here. In terms of stock wise, it's still a relatively young company, and it hasn't quite reached maturity yet, to where like a company like Apple is a little bit more mature of a stock. It's grown a lot more, and Facebook's still kind of in its growth phase, and soon it'll turn into a soon. By soon I mean probably within a 5-year period. I could see a change, and they mature the stock more into a stock that pays dividends. That's part of the reason that I suggest buying this now. Once that company starts paying dividends, which it will in the future for sure. I already know it. It's worth taking a look at because obviously investing in companies that pay dividends is fantastic because it's just free money. You invest, and they're going to pay you to invest with them. So it will be coming for Facebook in the future, but that's not part of why I have this buy thesis on them. That's just an added benefit of what we see in the future. So it's something I would certainly be looking for. My main reason here, as far as Facebook is concerned, is the fact that they absolutely print money. That's no joke at all. So we're gonna look. They recently reported earnings a couple weeks ago. But everything was going all well and dandy. They reported earnings on the 2nd, I believe. And then that is when we got some more information on tariffs. And that's that week, last week, wherever the market went down pretty severely. And even though Facebook had a pretty tremendous earnings, they still went down regardless. Just because of that, the fear of tariffs, and any regulations that might come with it regarding Facebook. So currently, short term, they're in a little bit rough of a state. Their 1-month chart doesn't look great solely just because of this past week, previous week. That's the main issue there. So let's go ahead and look at some of the numbers besides just stock value. Obviously, 188.49. Around the 188 range, I believe is a steal for this company. At this point, it's running a PE ratio of around 32. Obviously, that's not a fantastic PE ratio. It's a little bit high, but it's one of these companies that when it's in its growth phase, companies are always going to be exceeding a normal, quote-unquote, normal PE ratio. I'd say a normal PE ratio should be somewhere around 18 to 20. That's where you'd be looking for somewhat fair value for a stock. This one obviously is technically in the point where it's slightly over on value, but in comparison to most growth stocks, it's nowhere near. Right now, we're at a time where it's all these negative earnings companies that don't even have a PE ratio because they don't earn a profit. They're kind of ruling the headlines, and they're super overvalued. You got companies like Netflix, Tesla. They're dominating right now, and that's why I believe Facebook's 100% undervalued. If you compare to those other companies, Facebook is absolutely printing money. A forward PE of 19.74, that's fantastic. That's exactly what we're going to looking for. Price to expected growth, 1.35. Gotta love it. We're looking at pretty fair value, and I could see this going to a $250 stock within 2 years. By the end of 2 years, I could see it. I think that'd be perfectly fair value, somewhere around there. So naturally, we might have a little bit of short-term headwinds just due to regulations they're going to be facing. But here's where I'd like to mention a couple of the beneficial parts of Facebook. So first off, we have the Facebook app as is, which I think is relatively wild that somehow they're still managing to grow users. I mean, they're still growing users on Facebook, which you think Facebook's been around forever, and that wouldn't be their main growth vector, but somehow they're still managing to grow users, which is just a fantastic sign, because even that's their oldest platform, and it's been around forever, and they're still growing users on it. So it's a wonderful sign there. Both daily active and monthly active increasing, pretty much in every area. The only area that's a little bit lacking in terms of that, you can see, is the European market. Didn't quite increase between the last 2 quarters, but every other market did. So honestly, fantastic numbers there. And obviously, when we look at revenue, so last quarter, obviously, there was a little bit of a dip, entirely because they were increasing spending more on privacy. This was a huge increase in terms of payroll and bringing on new jobs and other privacy aspects, just due to the concern of the Cambridge Analytica scandal, where they had sold some data from the company. So obviously that caused a little bit of short-term headwinds, and they're still kind of facing some backlash because of that. Lawsuits from the FTC, stuff like that. They're getting fined. I know they just recently paid a $5 billion fine, which was expected, so that it didn't really affect the stock that significantly because that was already priced in. But $5 billion to Facebook isn't really much. They make 4 times that in a quarter, five times that in a quarter, 6 times that in a quarter. I mean, they make significantly more money than that in a quarter. So that's nothing to worry about. $16 billion here. I mean, $5 billion, what's that going to affect? You get 3 times that amount of money. So honestly, I would say in terms of that, there's no concern, but we got a consistently rising revenue here pretty much. It's just a very, very nice looking chart here over 2 years. That's a very good graphic there that we want to look at. All that we have was concerns in Q1, which obviously held the stock back a little bit. Advertising revenue going up, ad rates are increasing still, so that's something else. Because honestly, Facebook is still, they have a lot to monetize still, including their WhatsApp platform, which still has very minimal monetization. Instagram is getting there. So Facebook not only owns Instagram, WhatsApp, they own their Facebook platform, Facebook Messenger, and they're potentially looking into buying out another company, and they're also going to be starting their Facebook Libra cryptocurrency potentially. That's just a huge growth vector that could happen there. If they happen to have their own currency, then they literally would be printing money. But obviously they're facing a bunch of regulations that's going to come with that new currency. If it does come to fruition, it'll be a significant booster for them. It'll help quite a lot, and it'll skyrocket this share price. It all depends. With or without Libra, it's still going to be fine for Facebook. So just a couple things I wanted to point out there. And I think we'll go ahead and move on now. Go ahead and shoot to the next stock I would like to look at, which would be IRM, Iron Mountain. So Iron Mountain is a company that deals in storage of data. That's both physical, and they're working on getting more digital. So they store a lot of documents. That's a majority of their business. About 70% of their business is going to be document storing. 70 to 80% of their business is storing of documents. So obviously that's going to be somewhat outdated here in the future, just due to the fact that we're trying to become more paperless. Everything's more going digital. So that is why Iron Mountain here, obviously they're very well founded in that space already, but they have a plan and they've set it out in order to increase their actual footprint in that digital storage area in that field. So they're working on increasing what they stated was at least 5%, shifting that business from physical to overall digital storage. So it's something they're working on increasing, building new facilities to foster any of that digital storage. So I believe it's a transition that will go successful. I'm not necessarily interested in this stock just due to price increase. That's not why I think this is an interesting pick. It's a stock that's been beat down pretty heavily. It's currently sitting around $31 a share. It's been beat down pretty heavily. Not as bad as it was previously, but overall, we're down year to date, and I think there's plenty of room to go up. That's just going to be a side effect. Personally, I'm more interested in the dividend that they pay out. So first we'll look, so 52-week high around $36. So we care more about dividends. So they are currently paying a yield, forward yield of around 7.8%. They're going to be around that 8% range. It all depends on stock price here, obviously. So as the stock price goes up, that yield is going to be decreasing naturally, but the yield shouldn't be what matters. It should be the amount. And Iron Mountain has been consistently increasing their dividends throughout its history, and they're still increasing even though they're facing a little bit of headwind in that transition period between physical and digital storage. They're still increasing dividends every year, and it's something I would certainly want to look at. If I were you, I'd take a look, and this is a good company to invest in. I'd say for at least the next 2-3 years, just to collect that nice dividend. You won't see much stock price increase probably, but overall, I think you'll see a very good dividend, and that's what I think interests me about the stock. So now I'd like to move on to the last and final stock, which is more of a speculative stock. Obviously, this is going to be an interesting one because I went with both a growth, a dividend, and a speculative stock. That isn't necessarily going to be what we're looking at, but this one's more of a very speculative idea with the potential to be something great. It'll be NIO. So NIO is a manufacturer of electric vehicles in China, specifically in China right now. The potential here is quite significant just due to the fact that the Chinese auto market is somewhat untapped, and there's still plenty of room to grow in there, and especially with electric vehicles as well. So that's obviously the future is going to be electric vehicles. And any company that's already one step ahead of the program, like NIO is in my opinion, is going to be beneficial. Obviously, they're going to face a little bit of competition due to the Tesla Shanghai Gigafactory opening up relatively in the near future. Should be before the end of the year that opens up. But that's why NIO is trying to get a foothold already in that market, which I believe they absolutely can. No problem at all. Obviously, there's so many companies in China too, so many auto manufacturers. It all depends entirely on... I don't want to say it's luck, but I would say investing in NIO to try to see increases probably a bet. It's more like gambling than it is right now. A surefire, just because you don't know what the future of this company is going to be like. I personally think there's good potential here out of all of the companies over there. I think NIO has the best potential to actually be competitive with Tesla and actually try to take some of that market. They're working on it right now, and they're increasing deliveries pretty steadily on their vehicles. They just released a new ES6 model, which they're working on delivering as well. So it's interesting. Obviously, they're not very flashy cars. I'll see if I can go pull one up real quick. See if we can take a little look. So they're more like compact sedan type things. A little bit of a it's a lot cooler looking than their previous models. So the ES6 is pretty interesting. Fully electric, obviously. So it's something worth taking a look at. Because at any point they could certainly be making some big money if they actually get that working properly. So if they get all their things figured out, they're obviously not making profit right now. Neither is Tesla. So I don't think it's necessarily unfair that they aren't making profit, but it's something that they certainly can in the future once they get their system set. There's no profit here yet, but I believe that there's certainly a chance that this company amounts to something. They don't have that much cash on hand either, but I think there's certainly a chance. This is a stock that obviously skyrocketed previously. There was a bunch of hype around Chinese stocks, so you see that 52-week high increase so high, and then we got tariffs, which has dragged it down to this price, which is why I'm considering this as an okay deal just due to the price. The price drop that happened so rapidly. So obviously it's not a big company. There's no guarantees here, but if you look at it, there's definitely a lot of potential for growth here, and that's what I'd like to look at personally. So I'd say go ahead and take a look and do your own research, obviously, and if you're interested, go ahead. If you like this video, go ahead and let me know, and thank you for watching. Bye.